Good morning, everyone. Welcome to Business Tax Matters with Mike and Dennis. I'm your host, Michael Davis. I'm a certified public accountant. My co-host is Dennis Markowitz.
Good morning, and I am an enrolled agent.
We both operate from Bucks County, Pennsylvania. Today, our special guest is Mark Zimmons, CPA of DeNovo HR Consulting in Southampton.
Hello. I'm also a CPA and a HR expert. So,
welcome to our show. Our mission is to inform our listeners every other week as to the various aspects of running a business, the tax code, and answer any questions you may have. Please call in to our call-in number as 609-460-4673. Today we're also simulcast live on video through YouTube Radio at PANJ YouTube page at the www.panjtv.com. We'll monitor your comments and provide feedback. If you're interested in any of our past shows, they're now available at our website at www.bizandtaxmatters.com. And just so you know that you're listening to our live show, today is Tuesday, January 8th, 2019. We have an email address, which is bizandtaxmatters@mjdaviscpa.com. Our show will be podcast at panjradio.com and replayed at 11 a.m. every day for the next week. So if you're not listening to our live Tuesday show, send an email with your questions and we'll answer it on our next show. Again, the email address is bizandtaxmatters@mjdaviscpa.com. Please note Biz and Tax Matters in the subject. And if you want to call in live, a reminder, the number is 609-460-4673. So in the past couple of weeks, I've gotten some questions from various people that I wanted to bring up. One is I received an email from a client's investment advisor the other day that said, so-and-so's investment fees are X amount of dollars for figuring out his taxes.
apparently he doesn't know the new rules.
And my answer was, under TCJA, that's no longer deductible, although investment interest is. Investment expenses paid to an investment advisor are no longer deductible.
Well, I want to share with you that I got an email yesterday from an investment advisor who is a 1040 client with his business expenses as well.
Okay.
And when one of the staff mentioned that they weren't deductible, I said, well, maybe for Pennsylvania. So.
Exactly.
Right.
Also got a call last week from a friend regarding his mom who's going into a memory care unit, wanting to know if he should pay for her medical expenses and take her as a dependent. So the reason I'm bringing this up, he can also pay from a joint account with his mom, his sister, and himself. And the reason I bring it up is because I had to go to 5 different places. One was I went looking up the head of household rules. Then I had to go to see if she could be a dependent, which she can't be because she has $30,000 in income. Okay. Then third, medical expenses, are they deductible? They are deductible because she's there for medical purposes. And fourth, could he take it without her being a dependent? Which the answer to that was actually yes, because there's an exception to the dependency rules. If you can't be a dependent because of the income exclusion, you can still be a dependent for the medical expenses if the income exclusion is the only reason you're not a dependent.
And would it change if it was paid out of that joint account as opposed to out of his own account?
Well, see, then you got into the 5th item, which was a multiple support agreement that he'd have to enter into with his sister. Okay. And there's a regulation on that. And my answer to him was, because he's an accountant, he was an executive with a large company, he does his own return. My answer was, the regulations in the notes I sent you, look it up. And he did, and I actually had dinner with him Saturday night, and I asked him what he was going to do. He said, I'm not going through that. So, but it's just that, and Dennis and I were talking about this on the way in, nothing's simple anymore.
Yeah.
You can't just give an answer. Everything goes all over the place.
And you can't really rely on your past experience because it's a whole new game with the taxes.
Right.
Correct. Okay, now our updates for the last couple of weeks. One is, and I'm bringing this up only for one reason, the centralized partnership audit regulations have been finalized with questions that are going to have to be answered on the tax return. And we talked about this last year, Dennis, that the new partnership rules are, if the partnership gets audited, the audit is at the partnership level, and any changes in taxes at the partnership level at a high rate, which I think is 35%, if I recall.
The maximum rate.
Yeah, it's the maximum rate. There's an election the partners all have to make, and they all have to qualify, where they can elect to have it taxed on their individual returns, like it is normally, and the audit would be taxed at those lower rates. But it has to be an election made with the tax return, and all the partners have to qualify. A couple of things that I noted was, if one of the partners, and I had a friend that this happened to, his partner all of a sudden threw everything in a trust, and the trust was now the partner. That does not qualify to elect out of the audit rules
Okay.
if a trust is the partner. The other thing that surprised me was a single member LLC that's a partner does not qualify to elect out of the audit rules. But an LLC taxed as a corporation does qualify. So again, nothing is simple, but anybody involved with a partnership needs to look at this and revise their partnership agreements to cover this, so that nobody changes their format of the way that their individual partnership share is set up.
Keep in mind, this election is annually done.
Correct. It has to be done with each tax return.
So, the IRS announces changes to a free file program, and they've updated the agreement with a Free File Alliance that is intended to make the free file program more taxable friendly. That's a joke. While strengthening consumer protections in several key areas. The program allows any taxpayer earning $66,000 or less to use one or more free tax preparation software products offered approximately 12 free file partners. Among other things, the updated agreement, 1, removes the value add button from the free file partner landing pages. 2, automatically returns taxpayers to the IRS free file page if they don't qualify for an offer. And 3, gives returning taxpayers the free file option before any other offers from the company. And 4, provides follow-up emails and returning users welcoming them back to free file. And 5, emphasizes the in-place review process. The agreement is being announced now to give the software community enough time to implement the changes for the upcoming filing season. Now, all this is good, and I have many clients who now have to go online to register for whatever. In fact, I just had one last week, wanted to file for unemployment. It has to be done on a computer. He called me half a dozen times during the day because in filling out the questionnaire, he really didn't understand the question. You know, and now they're going to tell the taxpayers, oh, you could do it for free by yourself. Good luck.
The question is, how long is this going to be delayed because of the shutdown?
Well, I thought I heard last night that they announced that they're going to open on the 28th or 29th.
Yes, they're going to open up on the 28th under the existing conditions, which means they're totally inundated now, and that the refunds, if there are any, will be delayed for an unspecified amount of time.
I did see last night, and this is aside, that there was something on the news that there was some emergency funding approved to allow IRS agents to go back to work to process the tax returns and process refunds that have been sitting under the government shutdown. So I believe that some IRS agents are now back at work.
Well, I don't like to throw any political...
Any refunds that are sitting there right now would be from amended returns, pretty
Yes.
much.
Or from returns that were filed in October in paper that hadn't been processed yet.
Yes.
Yeah.
Okay.
But I don't want to get into the political ambiance of it, because since our president never submitted or published his tax return, whether he would want to fund the IRS or not. Anyway.
Yeah, we all have to bear a little pain in order to get a wall. Okay.
Correct. Yes. Yeah.
Okay.
And in this, tax court hearing, travel costs were not deductible for foreign students who work in the travel exchange program. Last year, the tax court held that non-resident aliens who participated in a U.S. summer work travel exchange program could not deduct their travel and living expenses because they weren't away from home in pursuit of a trade or business.
Okay.
Upon appeal, the District Court of Columbia affirmed the tax court's decision holding that the expenses weren't incurred in pursuit of a trade and business. Noting that the employers didn't require the taxpayers to move, which is part of the requirement for moving expenses. The taxpayers chose to come to the United States to participate in the summer work travel program. Therefore, their travel and living expenses weren't deductible under Code Section 162A2. And just as a note, under the TCJA, unreimbursed expenses for employees are no longer deductible anyway.
That's correct.
But I believe that this holding in this case was correct.
I agree with you, yeah.
Yeah, because they did not move for the job.
Mm-hmm.
So
A taxpayer, a licensed attorney in Spain, moved to New York City to pursue his LLM degree at New York University. The degree allowed the taxpayer to take the New York State Bar examination, which he passed in 2016. Following this, he worked as a visiting attorney for an international law firm in New York. On his income tax return, the taxpayer deducted the cost of his tuition as an itemized deduction. The IRS disallowed the deduction, claiming that the LLM degree qualified the taxpayer for a new trade or business. The tax court agreed, holding that although the degree improved the taxpayer's skills as an international attorney, it qualified him for a new trade or business and the practice of law in New York. Therefore, his educational expenses were non-deductible. I just find this unusual. Not that I've read the case, but if you're an attorney and you want to practice in your home state and then decide you want to practice in another state, you have to qualify and you have to be licensed. And in this case, he is an attorney. He's not improving his status, as far as I can see. And, it's additional education, like continuing professional education. So it's unusual, but I didn't read the case. And
what kind of classes did he have to take? Was it back to school to go to college classes because he needed more credits?
No, it's just he had to have that education. They didn't recognize his degree from Spain.
Right, so he had to take courses here in order to qualify to sit for the bar.
So so he could not work here.
So he had a new occupation.
So he had a new occupation. I agree with that. That's the point I was trying to make.
Yeah.
Okay, I think it is a new occupation because he was qualified in Spain, but he's not qualified here. So from that standpoint, and apparently that's what the court kind of
sounds like we're all in agreement.
Yeah.
No, I still
he still disagrees.
Oh, we disagree. Okay. All right. Well, you're wrong.
You're and you're entitled to your wrong opinion.
Yeah.
The IRS announced 2019 mileage rates at the very end of December. I think it was like the 30th they came out or something like that. But as of 1/1, the standard mileage rate for cars, vans, pickups is going to be 58 cents per mile.
Yeah, more money, yay!
So another 3.5 cents.
Right.
20 cents per mile for medical, 14 for charity, which doesn't change.
Right.
I think the medical was 17.
You mean the charity that nobody's going to be able to deduct because it's $24,000 standard deduction?
That's true too. Yeah. The rates cannot be used to claim an itemized deduction for unreimbursed employee travel expense or for moving expenses except for certain members of the armed forces because the deductions were suspended for individuals by the Tax Cuts and Jobs Act. The portion of business standard mileage rate treated as depreciation is 24 cents per mile for 15 and 16, 25 for 17, 18, and 26 for 19. Excuse me. When computing the allowance under the fixed and variable plan, the standard vehicle cost cannot exceed $50,400 for autos, trucks, or vans. And that's notice 2019-2.
What I find unusual is they're raising the rate, but the cost of gasoline has been plummeting during the past year. Now, I know they go back to previous quarters to do this, which may result in a drastic reduction next year in some of these.
Or
costs.
fuel prices could be going up. It always seems to be like a yo-yo.
Oh, it is a yo-yo. And
Yeah.
Or it could be Congress is buying more expensive cars and needed more deduction.
yes.
So,
Okay. The IRS has released a 2019 Form W-4.
Oh, that's exciting. It's only how many pages long, Dennis?
I don't know, about 7 or 8.
no, it's a postcard size.
No, it's
No,
not a post.
not-
No.
It's
only that first page. is
It's a
postcard.
postcard size with 6 additional schedules.
Yes.
Okay? So technically, it's a postcard size.
So that the
We're just ruining this for Dennis, aren't we?
Yes.
Yeah.
yeah. The initial plans called for a substantial revision to the form to take into account provisions of the Tax Cuts and Jobs Act. However, after considering feedback from the payroll and tax communities, the IRS decided to postpone the form's makeover until the 2020 tax year. Therefore, the 2019 form is similar to the 2018 version. However, the Form W-4 deductions, adjustments, and additional income worksheet has been updated to reflect the increase in annual withholding allowances from $4,150 to $4,200 in 2019. Also, the worksheet has been updated for the increase in the standard deduction for 2019. From $24,000 to $24,400 for joint filers and surviving spouses, and $18,000 to $18,350 for heads of household, and $12,000 to $12,200 for single filers or married individuals filing separately. The 2019 Form W-4 can be accessed at the irs.gov website. That you can go there. Now, it's very unusual. So the old W-4s, it was based upon your exemptions. Well, exemptions are no longer deductible.
Except the exemptions are still part of the tax
Yes,
tables.
yes, they are. But, originally, it was the employer's responsibility to make sure the employees filled out the W-4 accurately
I think it was
without having any of the information.
Right.
Well, this is one of the areas that is like a pet peeve of mine, because I get calls all the time. What should I fill out? And I'm still stuck with like marry 0, single 1. Don't bother the rest of the form. The problem with the forms always has been it doesn't count the other spouse, so it always messes up. So no matter what you claim, it still doesn't count what your spouse may earn, and you're just going to have to consult your tax advisor. And on top of that, with the lack of people. With the revision of the tax tables last year, that a lot of people are going to end up with smaller refunds this year than they would have anticipated.
And maybe pay.
This all sort of feeds into that same illusion of like, I had a client that got a job. He reached out to me yesterday, like, I haven't got a new job in a while. What pages do I fill out? I go, married, 1.
See, now typically I say single 0. Because sometimes the differential isn't that great, and as a protection, rather than have estimated taxes, withhold a little extra, so you can look like a hero if it's a refund. But then again, depending upon the spouse, you can wind up.
Well, my reason for marry 0 is because the spouse is a Schedule C attorney, and we were already doing estimates, so I figured I'd just dovetail.
Well,
whatever he was paying,
Right.
so.
Yeah.
My pet peeve with the W-4, and I'm not drastically changing the W-4, since they issued it, they have been warning people that there hasn't been enough withheld, and people that normally get refunds could owe money to examine your withholding. They've been doing that all year, and then they elect not to change the form.
Well, it's also because of the fact that the change in the tax law, which suspends the exemptions, is just exactly what the W-4 is based upon.
Correct.
It either adds exemptions to what your deductions are or asks you, is totally not in alignment with what the tax return is now. So, there is no real answer, because you just have to, at some point, you have to look and see if you're having enough withheld based upon your total annual income. Okay, but it's revised.
It's revised.
And if you hire a new employee, you should have the employee. The big thing is that all employers are required to get You know, the W-4, the I-9s, and if you're Pennsylvania, PA-32s, and people should be filling out the correct year's W-4s as an employer because that's what you're required to have.
Well,
that's the takeaway.
I just filled one out, and I filled it out as single zero. So
Okay. Don't tell your wife.
I have her wife. Am I supposed to talk to her?
Well,
Anyway, now we'll get to our topic for the day, which we're going to start with employee versus independent contractor and hopefully get into 1099s. But the one thing I would just want to remind people of is on the 1099s, I want to make sure in case we don't get there that businesses need to issue 1099s for anyone that performs a service of any kind. And that 1099, according to the instructions on the 1099, includes labor and materials on that service.
correct.
It's generally for those that earned over $600 in services.
No, I believe it's over $599. I think the actual wording is you have to issue it if they made 600 or more.
Yes.
By the way, just adding to that, there is no requirement that you can't issue one if it's less than $600.
You're right.
That's true.
Okay,
It just says you're not required to.
correct.
But any 1099, and then you got to do 1099s for rents, and there's a whole school. I think I went looked at it, there's like 18 boxes on the 1099 that have to be filled out. If you're putting in box 7, income for non-employee compensation, that has to be filed with the IRS January 31st.
Correct.
All the rest of the 1099s are due February 28th. So I'm bringing that up just to remind people that by January 31st, you have to get these filed. And if you have more than 250 or more, they have to be filed electronically.
Yeah, I think that for the most part, I don't know about you guys, I just push January 31st because
Well, if you're doing one, you try to do them all.
you're going to do them all anyway.
Exactly,
And,
yeah.
and the ones that people always seem to forget, and I know we're going to jump at it, is rent and attorneys. And attorneys are the only ones that don't have that corporate exemption.
No, medical. Doctors do not have the corporate exemption either.
Right, but most clients wouldn't be paying doctors.
Right,
Yeah.
right.
Yeah,
But
correct. You're right.
but anything for medical expense would be.
Right.
And I read for that purpose, veterinarian expenses count as medical if it's for business.
I would like to meet somebody deducting them. Well, we're going to get guard dogs at
You
the
know,
office.
it did say you're allowed to deduct it.
Well, you don't have to give a 1099 if you're not
If you had guard dogs at the office that
Okay.
lived at the office, yes, they would be deductible, and their veterinarian fees would
They are
be.
becoming more common at accounting offices now.
Yeah, yes.
Yeah, and there was just a ruling that the food for them is deductible too if they're guard dogs.
Oh, okay. Well, that's good to know.
So,
Okay.
back to the topic is that employers want to try to really avoid making people independent contractors, whether it be for workers' comp, they don't want to pay, they don't want to pay benefits, which there's nothing requiring people to pay benefits if they're small employers, and they don't want to match the payroll tax returns, the payroll taxes for Social Security and unemployment and all that kind of stuff. But the penalties are tremendous anymore.
Yeah.
It's $50 per 1099 not filed. Excuse me, up to a maximum for small businesses of $191,000.
It's even worse than that because you theoretically could get unemployment involved because somebody who thinks that they are an employee but are being treated as an independent contractor, they file for unemployment. That sometimes triggers it. You could end up having, wage and hour come in for the same reasons because you may not be paying them appropriately if they're an employee. From an HR point of view, we take the position that you are an employee. Now prove that you're an independent contractor. And I know we're going to go through all the stuff that the IRS says, but basically, misclassified employees, which is what the IRS calls them, is like a hot button topic, and it's better to be safe than sorry. And a lot of my clients think that the person they're hiring dictates it. I don't know if you get this one. I'm trying them out. they only working part-time.
I have a client that does that, says, I'm trying them out.
Well, I gave somebody the example. I said, okay, so you have a person who works for Home Depot 20 hours a week and Lowe's 20 hours a week. They are an independent contractor. By your definition, yeah, because they only work part-time, and yeah. So we can go through the rest of your stuff, but I'm just saying, like, this is
No, I
like
agree.
This is like one of those things that, you know, people think that, you know, the employee doesn't want to be an employee.
Yeah, I've heard that too. Yeah. Yep. The one client that I have that says he's trying them out, he's not putting them on payroll. Well, if you're issuing them a 1099 and a W-2 in the same year,
Well, you're not
that's a
allowed to do
little
that.
bit of a flag.
You're not allowed to do that either.
You know.
Well, the other thing too is that a lot of times people will allow these misclassified people to be independent contractors so they can deduct their expenses. But the other way to approach it is for the employer to pay those expenses and factor that into the total compensation as a way of bridging that gap where they think that person's going to, quote unquote, save money.
And that's actually because the employee business expenses are no longer deductible. I've tried to explain to clients, employees and employers, to factor that in now to the wages so that the employee still gets a deduction for it with lower income, but you pay the expenses.
That's only to property classified. If you're an independent contractor, you'd file Schedule C and you could deduct.
Correct.
Okay.
So,
We're all in agreement that this is like an area that like we get a lot of questions on, and people tend to want to like make arguments with us that you know they're an independent. It's always been this way. They're an independent contractor. That's how they are for other jobs. Whatever their reasons are.
Well, that's if they have another job. That's number one. And number two, do they actually have a business card? Do they actually have whatever they need to do the work? Insurance. But if they're an independent contractor and they get injured on the job, you better have a lot of insurance in your general liability and for the others.
Actually, under Pennsylvania law, you need to have your subcontractors covered.
Yeah, sure.
Well, actually, under Pennsylvania law, they look at your 1099s, and if they don't have insurance, they make you pay for it.
Right, and the other thing is, if under Pennsylvania law, somebody that's an independent contractor that works for somebody, this particular case was a trucking company back in, I think, 2012, that the trucker had an accident. The driver for the trucking company was a subcontractor, legitimate subcontractor. The driver got hurt in an accident. The trucking company didn't have workers' comp. The company they were hauling for was held liable for the guy's workers' comp.
I have a similar case that goes back many, many years. It wasn't my client, but it was somebody who was in the construction business, and they were hiring day laborers to come in and help. And it was one of those times where I'm sure we've all seen builders like have a 55-gallon drum and they're burning building materials in there. Well, this guy threw gasoline on the thing and caught himself on fire. No workers' comp, and put the guy completely out of business and bankrupt. He was a Schedule C, by the way. He wasn't even in a corporation. So.
Yeah, but in the case I was talking about, the Supreme Court of Pennsylvania actually held that the person that hired the subcontractor was liable for the workers' comp, even though and at that point they were making a complaint that the complaint was that actually overrode 35, 40 years of prior cases. So with that, we're going to go to break. We'll be back in a few. I want to thank you to my guest, Mark, and my co-host, Dennis. Talk to you soon.
Hey, I'm Deirdre Anderson with Delish Catering.
And I'm Laura Mangone from Chambers Walk Cafe and Catering.
And we'd like you to join us on Food for Thought, where what do we talk about, Laura? We talk about restaurants, we talk about
Pet
recipes,
peeves,
pet
food.
peeves, bitchy hostesses,
All sorts of food-related items.
all sorts of
Tune
food
in.
stuff, and sometimes not so much food stuff. We go off on segues, but we have a lot of fun, don't we?
Absolutely.
So join us on Food for thought.
PANJradio.com, 1 o'clock weekdays.
Hi, I'm Vinny Veterosa, and I approve this message.
Vinny is such a pussycat. And incidentally, if you've never had a massage by Vinny Veterosa, you must do it. You will be grateful to me for having suggested it, for him for having done it, and for yourself for having the wisdom to accept the advice.
Have Table Will Travel with Vinny Verderosa.
He's got magic thumbs. The man has magic thumbs. He really does.
He really does.
Right now, 3 one-hour sessions for the price of 2, which include general massage, reflexology, and acupressure. Check me out. See for yourself why people feel so good when their session is done. On Facebook, Acupressure Have Table Will Travel. On the web, relaxintoreiki.com/partners. My telephone number is 732-259-3129. And you can get me here anytime on PANJradio.com.
I can't get my computer to work.
Let me help you with that.
How'd you do that?
I just got techie with Geeks on Site.
Our geeks literally come on site. No need to stop what you're doing or block off time. We come to your home, office, or wherever you are. And we don't just fix whatever computer issues you might be having. We explain and teach you along the way so you can feel empowered and then help others at home or in your office. Better yet, don't have time for tech support to come to you? Let us remote into your desktop or laptop, and one of our geeks will instantly walk you through. We offer affordable prices on our remote services and IT support. You and those in your office will never have to wait hours to have your technical questions answered. Get your free computer diagnosis today with your very own geek.
Get started now and we'll help you instantly. Call 844-606-8411. 844-606-8411. That's 844-606-8411. Have you been thinking about trying Viagra or Cialis? If you're paying $20 a pill for Viagra, you're being taken to the cleaners. Our pill delivers the exact same results for less than $2. Save more than $16 a pill for the same results. Get 50 blue or 50 yellow pills for just $99. You save more than $500. Ordering is fast and easy with your pills delivered to your door in an unmarked package. Call us right now. 800-359-9116. 800-359-9116.
Welcome back to Biz and Tax Matters with Mike and Dennis. I'm your host, Michael Davis. I'm a certified public accountant. My co-host is Dennis Markowitz.
Hi, I am an enrolled agent.
And we operate from Bucks County, Pennsylvania. Today, our special guest is Mark Zimmons, CPA of De Novo HR Consulting in Southampton.
Good morning.
Our mission is to inform our listeners every other week as to the various aspects of running a business, the tax code, and answer any questions you may have. So if you have any questions, please call in to our call-in number, 609-460-4673. Also today, we're simulcast live on video through the PANJ YouTube page at www.panjtv.com. We'll be monitoring your comments and give you feedback. Today is Tuesday, January 8th, 2019. So if you're listening to one of our replays over the next week at 11 a.m. or from a podcast at panjradio.com, send in an email with your questions to bizandtaxmatters@mjdaviscpa.com and put biz and tax in the subject matter. We'll answer your question on our next show. All our past shows are available on our website at www.bizandtaxmatters.com. And again, our call-in number is 609-460-4673. So back to our topic on employee versus independent contractors and 1099s with our special guest, Mark Zimmons. So Mark, there's a lot of sources to determine whether an employee is an employee, or to use to determine if an employee is an employee or an independent contractor. IRS, previously used a 20-factor, 20 questions that the courts have since limited to 3 basic questions.
Correct.
The first one's behavior, where they want to know what do you do, who does it, how do you do it, who tells you how to do it, and when you show up.
And I think that's one that people try to hang their hat a lot on. Because in a lot of cases, even if you were a legitimate independent contractor, you're still being directed. You're getting a scope of a job.
Correct.
Right. You're getting a scope of a job. You're getting the parameters of how that job needs to be done. You're being told what your time frame is and your deadline is. You know, even employers don't always tell employees when they have to work. So, yeah, that's one of those ones that tends to be one that gets thrown up as, you know, seemingly can be applied to anyone.
Yeah, and I would think that just because you meet the parameters there, they're still going to look at the other issues.
Correct. I'm just saying that's one that's always one that people start off with. I didn't tell him how to do this job. I didn't tell her how to do the job.
Well, it's very prevalent today that so many people are working from home on their computers that, you know, all of a sudden it expands the parameters here.
That's true. And even those that are doing that treated as employees, there may not be giving specific hours they have to work, but they have to work X amount of hours in a day.
Well, I see in my own experience and practice and stuff that a lot of remote employees were treated as independent contractors in the past, and we're seeing a lot more change now to being actual employees where the company has to register and withhold the proper state's withholding and unemployment tax, because in reality, they're just an employee who's working at their house in Idaho instead of in Pennsylvania.
Now, throw this out there, does that give the company nexus in Idaho?
The answer is, it's an interesting question because I have this in 2 situations. We have this actually in de novo because we have remote workers, okay? Those workers are mostly in the marketing side. We're not billing them out, so I believe we do not have nexus. I have another client has independent contractors, that has employees and they're in the IT services world where they are billing out per hour. Those clients, I believe, have nexus because they're generating revenue from the home in Maryland or whatever state. So they would have nexus for whatever's billed for that client. So I would think if you're billing that employee or that employee generates revenue, then you're going to get the nexus from the sales part of the nexus.
So basically what you're saying is there's nothing specific to guide you on it.
This is just like the same issues come up when we talked in a previous show about Wayfair.
Yeah.
This is sort of the same kind of an issue. Although I think if you can draw a line and you can be consistent and say, listen, I have an employee who's an administrative employee who helps the company. I'm not sure how that provides any support and any revenue in that thing. And sales seem to be the trigger in most states.
Yeah, and most states, the calculation of how much is taxed there is based on revenue generated.
But if you were a professional like an accountant or a lawyer where you're charging by the hour, or in my case, somebody who's an independent contractor, who's a IT person, then if you're generating revenues from that person and they're located in another state, I think you got nexus issues. And I mean, I'll defer to you guys for what you think, but I think you have nexus issues in that case.
Yeah, I would agree.
Well, yeah, I can only tell you that the states are desperate for tax money. So they'll take any stand that's unreasonable.
Correct.
Well, also, and a thing that I find that I hear from clients a lot is, well, I pay my tax to Pennsylvania. Well, Jersey doesn't care that you paid it to Pennsylvania.
That's correct.
Maryland doesn't care. And Pennsylvania, and the problem you end up having is if you don't recognize the nexus and you run the statute of limitations, you could be paying the tax twice because there is no statute of limitations on paying the tax in a state where you never filed. But there is a statute of limitations, which is usually 3 years, in a state where you did file. So you're not going to be able to get a refund.
And Pennsylvania has no statute of limitations.
Yeah, that's exactly right.
Most states do not for failure to file.
Right. So,
which is another reason why the Wayfair was so important, because they basically said, because it was a Supreme Court decision, they basically said, well, we can go back as far as we want. But if you do it by October or January or whatever the state was, we promise we won't go back.
Right. Which was a smart thing for them to do to get people to sign up and not worry about what happened in the past.
People were running and not walking to figure it out.
Exactly.
Yeah.
So the second test is a behavioral test. How are they paid?
You mean financially?
Yeah,
financial.
they
not
pay
the
by
hourly.
the hour. Are they on salaries? Do they get paid by the project? You know,
Well, that's more of an interesting one because it depends. Like there are, I would say it leans more towards a contractor if you're on a contract for a specific engaged time. I think it leans more to an employee if your contract keeps getting renewed. So I think that if you were hiring somebody for a specific project for a specific length of time, that would lend that credence to them being an independent contract for that client, especially if it's in the professional services. I have a client where I had actually he's a contractor for Comcast. He hired an engineer to help him with part of what he did. It was 1 3-month engagement. It was not renewed. He treated him as an independent contractor, which, as far as I'm concerned, was proper. And then, believe it or not, the guy applied for unemployment. So, which is exactly the reason. But I think we're going to have no problem with that because in this case, I believe, for those reasons I said, he was a professional, short-term contract. It was common to what he had done before, and that criteria didn't meet. Now, if he kept renewing those contracts for another project or extending the project, he could have crossed the line, right?
yeah.
Okay.
And did he have a contract for each job?
Well, in this one case, he had a contract. So,
Okay.
yeah, he did. Or some kind of a short-term contract.
You know, because I have a client that's a contractor that years ago when we first met, and he's with a franchise. He was using subcontractors, and I told that he was paying by the job. They got X amount for the job. If they had to go back, they didn't get any more. If they had to go back or it took longer, if it took shorter, they got the same amount of money. Didn't matter. But I told him that he should have a contract for each job, even though he may be using the same contractor.
The fact that there was a fixed fee doesn't necessarily lead to the fact that it wasn't an employee.
Correct.
Unless the fact was that they fell below the minimum wage, in which case then that might be an issue.
Well, he took my advice and he got contracts
Right.
that he uses for every single job that he does now still. And I had handled at the time more than one client in that franchise. And the franchise took the idea over and was telling the clients, to the contractors, to get contracts for each job. So one of these guys got audited. And the IRS said, okay, they're independent job contractors, let's see. And we showed them contracts for every single job. God, literally, she just took one look and said, okay, next.
Well, you understand the fact that your client got a contract is probably about 100% more than everybody else does.
Oh, yeah, no, I agree with that.
Right.
But that was the thing that really made a big difference. And just to give you an idea, this auditor was doing line by line and wanted a detail on what $90 in business gifts was on the tax return. But on the independent contractors, she saw the contracts and she was happy.
I don't know about you guys, but when I get asked this question, I imagine me sitting in a room with the agent or whoever that person is questioning me, trying to defend my client's actions and what I'm going to say, and whether or not I sound like I'm coming up with a story or I have something, and then why I'm going to explain to the client, who's then going to say to me, "Why didn't you warn me of this?" Which they always seem to say after the fact, which we always do. So.
Right. That's why I don't like clients going with me.
Yeah, either do I.
Oh, never. Right. I had a client that I picked up, and he was a contractor, and all the employees were subcontractors using his vehicles with his name on it, his supplies, everything. You know, they were employees. So I told him he had to set them up as employees. He didn't like it, but we did. Well, he was audited for prior years, and they came along and they were proposing all kinds of penalties and everything else. And I said, listen, I just picked up the client. He was not aware of it. Take a look at it now. They're all employees. We made the correction, and they let it go. So
they will if you make the correction.
Yeah,
yes.
if you have the intent there, they will be lenient.
There's actually an exception that if you make the correction, that it's acceptable.
Yeah, but that was before this, before they came up with that ruling.
Oh, okay. Well, then you go back a long time.
Oh, yes.
They had tax returns with dinosaurs?
Oh, absolutely.
No, it was a tablet and a hammer.
Tablet.
Oh, okay.
They just use the other side of the Ten Commandments.
Yes.
So basically for financial, if you're paying them hourly or if you're paying them a salary, if they look and act like an employee at that point, they're an employee.
And quite frankly, most independent contractors, legitimate, like legitimate, we're going to get paid by the hour. So being paid by the hour in and of
Correct.
itself doesn't designate anything. It's just,
No,
yeah.
no. And I have independent contractors that get paid by the hour.
Correct.
Yeah, but in your case, you have many clients. It's not like you're working for one client.
Okay,
And
but I'm
that's
also
the
talking about,
difference.
actually I could be talking about a web designer, a graphic artist.
Correct.
Who may not have as many clients, but
Right.
they could theoretically be an independent contractor, A,
Yes.
because it's a single project, B, they may have their own business card and all the other stuff that you were talking about
Yes.
before. Yeah.
So the third test is classification, how the employer classifies them. First question is, what do you call them?
Bob.
If you call them a shareholder, they're not a independent contractor.
Or an employee.
If you call them an employee, they're not an independent
I would say
contractor.
that, this gets into that same thing. Unless you can say that they're not an employee, they are. I mean, you can say, she's an administrative assistant who comes in part-time, employee.
Correct.
It's very hard if they're on premises to be an independent contractor. If they're regularly coming on premises to be an independent contractor.
And I got, I was talking to a prospective client that's a psychologist.
Right.
And she has other psychologists that comes in and work at her location that she insists are subcontractors.
Well, they may be.
They might be.
I have seen those kind of arrangements where those people pay rent and a percentage of their fees and a management fee because they bill for everyone.
And it's a new client, so I don't know what that financial part of that arrangement actually is.
Yeah, but that kind of thing I've actually have seen happen before.
No, and I agree.
Right.
But if she's paying them $30 an hour and keeping everything, and they're getting a flat rate, it's kind of hard to say they're independent contractors.
Who suffers if there's a cancellation? All kinds of those.
Correct. Yeah, and like I said, it's a new prospect, so I haven't gotten into all that.
But make sure that I want to make sure that everybody understands that you didn't say I'm trying them out.
No, that's
part-time.
that's wrong. Yeah.
There's a million of those other kinds of things that I think we all have heard that people use as differentiators, which aren't differentiators.
The other thing is, did you give them a 1099? If you don't give them a 1099, you're not following through with saying they're independent contractors.
Well, I would say that in those situations, they are either, if they are a true independent contractor, you're required to give them a 1099
Correct.
if they're unincorporated. And if they're an employee, you're required to give them a W-2. So if you didn't give them a W-2, then you probably should have given them a 1099, and they're probably going to get penalized for not doing it anyway.
Correct.
Yeah.
Correct. And as we talked about a minute ago, is there a subcontractor agreement on each job? That's a big plus. I want to thank the producer for playing music in the background.
I'm sitting there going, oh my God.
You know that day when it plays automatically. I hate that.
With these employer and subcontractors, I had a scenario where a plumber had an employee, and the plumber gave the employee his own vehicle with his name on it. This employee went and moonlighted on the side with his employer's truck, and there was a problem with one of his customers, and they sued the company. The company says, "We never did anything for you." "Oh yeah, your employee came out with their truck," and you have to be very careful.
Yes, you do have to be very careful. And the last question under classification is, does the relation terminate after a fixed period of time? Like you're hired till this job is finished.
Well, but that also is mutually exclusive to, it's only temporary, which is the other one. Or they're a 90-day
Correct.
probation. That does not meet the thing of
The criteria.
the criteria of a termination.
Right. If it's a project completion, that could meet the criteria.
Right. Well, I'll hear people say, "Well, they're on a 90-day trial."
No, that's not a project.
Okay. I think we're on agreement, but that's like
yes. And again,
we all have clients who the rules, and they come up with the 20 questions of why theirs may be a little tiny bit different and therefore fit into a different category.
That sounds like I have an easy tax return to do.
Yeah. That's the first scary question of it. Yeah. By the way, if anybody out there calls a return says I have an easy tax return, that's like that's a red flag.
Yes.
Yeah.
For us accountants, yes.
Yes. I don't think they exist anymore. So.
Mm-hmm. What, the accountants or the tax returns?
The easy tax returns. And so finalize that section again. If they look like an employee and smell like an employee, they're an employee.
I think if there's even a doubt, you just want to treat them as an employee.
Yes.
Nobody ever gets penalized for treating somebody as an employee.
Correct.
You only get penalized if you treated somebody as an independent contractor who should have been an employee.
Well, on the other hand, the employers are considering the payroll taxes as the penalty.
Yeah, however, we all know that if they treat them incorrectly, the penalties are going to be much more excessive than just those payroll taxes.
Not deductible.
Which, by the way, and just so we quantify it, payroll taxes, including most of workers' comp, is going to be in around a 10% range. That's
Correct.
usually what we tell clients.
So,
if you're paying somebody $20 an hour, it's going to cost you $22.50.
Right.
To have one
That's
payroll.
pretty
And that
much what I tell people.
$2.50 is worth sleeping at night and being
It's
consistent.
insurance.
Yeah. Again, insurance. Insurance for the insurance you need to have.
Yes.
Yes.
Yes. I actually got a call this week from a client's new bookkeeper that she's only been there about 7 months. But
independent contractor.
No, she's an employee. She called up that she wanted to know why the payroll taxes were so much higher on the January payroll than they were in the December payroll.
Okay.
And it was, hey, you have to pay unemployment only on the first $10,000. So once everybody makes $10,000, they're off. You don't pay that tax.
We did our first payroll already, and it's painful. It's much easier in December than it is in January.
Yes. Yes. I know that very well. So now we can get into the 1099s. And I don't know if I mentioned this before, but if previously rentals were exempt. However, there is an opportunity for a lot of rentals to qualify under the qualified business income deduction. And the feeling of some of the people that I've heard speak is that if you're going to take that position, you should be issuing 1099s.
Yeah, because you want to operate, you want to demonstrate all the things that you're operating as a business.
Even though it's still treated on the tax return as rental income. But to say that it's like a business, you need to act like a business and issue 1099s.
I would agree with that.
So I've actually contacted my larger rental clients to talk to them, to tell them, hey, we should be issuing 1099s, and here's why.
I think that we talk in a lot of the areas of the tax. It's form over substance. Sometimes it's the way you make it look.
Oh yes, that's correct.
So I mean, the same way that I said that I was making a comment to Dennis saying earlier that it has to be over $599, and I said, there's no reason it can't be less than $600 because I get nervous when I have a bunch of clients that have $575 independent contractors. I just want to I just feel like we should issue because we don't want to ever look like we're trying to stay under a number.
You mean so my client that pays his kids $575 a year for modeling fees?
Well, worse than that, if you're doing a return, don't you have an obligation? Well, first of all, everybody needs to understand, this is really important. There is no obligation that exempts you from reporting the income. So if you're paid $575 and don't get a 1099 because you're under $600, it doesn't mean that it's tax-free.
Well, even if you don't get a 1099 and it's more than $600, you still have to report.
No, I'm saying that I've heard this one. Well, nobody ever sent me a 1099. Well, okay, fine. Then you're both wrong.
Correct. Yes.
Right. But for different reasons. That employer for company is liable for penalties and, but you're still liable to pay. There's no, free lunch out there.
Yeah, I mean, and we all have clients that just come in. These are the 1099s I got. That's all I received.
No. I have clients like that. I want to see all of their bank statements. And if the deposits are greater than the 1099s, I pick it up as income. And then I may pick up an extra.
Well, yeah, clients have to understand that we sign the returns. We sign the returns that we're basically signing a little less than you are, but to the best of our knowledge, it looks reasonable and accurate. And one of the things is that if we get the sense that a client's not reporting everything, it's going to preclude us from signing that return and preparing it, perhaps.
Right. Correct. And now the issue with the due diligence form that we have to fill out, which is going to include head of household this year, is a pain in the neck with all those questions that we have to go through and stuff we have to retain.
And document.
Correct.
I have a question about I just sold $2,000 worth of furniture, and I'm going to deposit a check. I don't have to declare that as income.
Business furniture?
Yeah, furniture out of my house. Yeah.
Furniture that you've used in the business,
and depreciated and written off and paid for out of the
or
business?
furniture or household furniture,
furniture,
like a dining room set.
Yeah.
I would say I wouldn't declare because it would be a loss.
It's not a declare, right? But it's over $600 and it's a check.
But
it's not business.
Did you pay more than $2,000 for the furniture?
Oh yeah.
Well, then then you have no gain anyway.
Right. So there's no gain.
And because it's personal, you can't take a loss, so it's not reportable in that situation.
Correct.
Gotcha. Okay.
That's the detailed answer.
Yes. Mm-hmm. Now, I'll subject that to the fact that I had a client. This is just because of the same thing. A client of mine that passed away, and he was a marketer. And in the early 60s, he exchanged with somebody some marketing work in exchange for furniture the guy built. He turned out to be a very famous furniture guy, and he had over $500,000 of collectible furniture when he passed away. That, of course, was part of his estate and taxable. And to the extent that he sold pieces when he was alive, was subject to capital gains.
Yes.
Mm-hmm. Right.
Yeah.
But not your furniture.
Yeah.
No, mine's not worth
I've seen your furniture.
So anyway, as we said before, 1099s have to be issued for those earning $600 or more. And we also talked about corporations that have to get them. If somebody is an LLC, they are not necessarily taxed as a corporation and get a 1099.
I tell clients all the time, get a W-9 from everybody before you pay them the first time. I don't even care if it's $100 because then you're going to forget later.
It's exactly what I tell people.
Right. And you do not know whether an LLC is exempt or not without the W-9, which for our audience, W-9s, it says how you tax, what are you, and then it says if you're an LLC, you tax as a sole proprietor, a partnership, a corporation. If you're a corporation, you're exempt. If you're a partnership or a sole proprietor, you're not.
Correct.
Right.
What if they refuse to give you a W-9?
Refuse to give them the check.
Well, it's too late.
No, don't give. So
but they already got the check.
You don't give the check until you get the W-9.
Well, I know, but that's already beyond that point.
Okay, well then you have an issue. But listen,
issue with 1099.
And in the case of the one you're talking about, which I'm familiar with, it was under $600.
Yes, it was $250.
Yeah, so you're not required to send a 1099. It doesn't mean they're not required to report it.
Okay.
But the thing is that you always get a W-9 completed promptly and incomplete when you're holding their check. So that's why I always tell people
from now
to do it before you give them the money.
That's correct.
And even if it's less than $600, because again, you could call a plumber and it's $250, and then you call a plumber 3 other times and it's $800. But
it's cumulative for the year.
Correct. Successor reporting, and we've got I had several clients that were bought out during the year. If they agree, the successor can file the 1099s for the entire year, provided the employer, the predecessor gives them the information. But that's something that needs to be in the agreement of sale.
Agreed.
And agreed upon. But that is a quirk in the code. I've never seen it done.
Are you talking about a successor in a stock transaction or an asset transaction?
It would have to be stock.
Yeah, stock. Right?
Yes. No, successor in buying the assets in the business and the goodwill in the customer list.
And the name.
And the name.
Now,
I've never seen it done.
Yeah,
So
I have a couple situations where I've had some 330H10s, which are stock transactions treated as asset, and we're going to handle the 1099s for the whole year.
And then, to me, a stock transaction is not selling. It's just selling the stock. The business is still there. The entity is still there.
Yes.
So it's not really predecessor, successor.
Same EIN.
Yeah. So, with that, I want to thank everybody for listening. We will be back in 2 weeks, and hope all is well. Have a good 2 weeks. Again, if you have any questions, Biz and Tax Matters at mjdaviscpa.com. Thank you.
And a happy and healthy new year to everyone.
Yes.
And get that 1099 information to your accountants. They're waiting for it.
Yes.